Today, Bitcoin dips even as exchange outflows hint at signs of bullishness among big investors. Hackers steal $1 million in crypto from BitKeep, and Andy Bromberg of CoinList explains why retail investors leaving crypto might mean more stability for prices. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies taking back just a bit of yesterday's gains. By noon Eastern, Bitcoin was in the red, trading around $19,000. Ether, meanwhile, still trading around $1,300, and Solana fell to $30. Bitcoin's losses come despite nearly $1 billion worth of the cryptocurrency exiting exchanges today. Institutional players seem to be shifting away from selling and are looking to hodl instead. All right, let's talk about the top stories. First, the SEC and CFTC have launched a probe into the collapse of Three Arrows Capital. According to a report from Bloomberg, the two agencies are looking into whether the bankrupt crypto hedge fund misled investors about the strength of its balance sheet. And they're also investigating whether Three Arrows registered with the proper agencies. Of course, Three Arrows filed for bankruptcy back in July after a huge sell-off in crypto. And just yesterday, we told you that liquidators were still trying to reach the founders and asked to serve Kyle Davies and Su Zhu subpoenas through Twitter. Next, Aptos, the blockchain network launched by former developers of Meta's Diem, is off to a rocky start. The highly anticipated network was branded as a Solana killer with the ability to process more than 160,000 transactions per second, 2.5 times more than Solana. But right now, Aptos' blockchain explorer shows only about 4 transactions processed on the network per second. Aptos responded to some of the concern on its Discord, saying the explorer only showed the current transactions per second, not the full potential of the network. Aptos also said that the figure didn't include user transactions yet, which will start tomorrow. Last, hackers just made off with $1 million in funds from crypto wallet BitKeep. Developers tweeted Tuesday that hackers had stolen both BNB chain and Polygon tokens thanks to an exploit of the company's swap protocol. BitKeep said on Twitter that the hack had been stopped and that it was launching a compensation plan within 3 days to help affected users recoup 100% of their losses. All right, for our main story, we're turning back to markets. Crypto World's Tanea McKeel spoke to Andy Bromberg, co-founder of CoinList, about the latest moves in crypto and the shift in retail investing trends.
Cryptocurrency is specifically Bitcoin and Ether have been really quiet for a while now compared to the volatility that we're seeing on the equity side. And as you know, crypto, or Bitcoin at least, has followed equities very closely all year. And I'm looking at prices from this morning, stocks up, crypto down. What do you make of it?
Yeah, it's really interesting. There has been a significant divergence after really a year plus of a pretty tight correlation between the two. Now, I think a lot of what's happening there is that the crypto markets are in a much bigger way than the equities markets, driven by retail investors, retail participants, whereas the equities markets are much more significantly driven by institutional participants. And what ends up happening is that when price goes down, the space kind of loses a little bit of steam. A lot of retail participants end up saying, this isn't for me right now. I'm going to step out of it, because for them, it's just something that they participate in on the side. It's not their job. Whereas in the equities markets, every institution is still trading no matter where the price is. That's something that needs to happen. And so I think that when retail leaves, when a lot of the leverage gets flushed out of the system, you start to see the prices stabilize a little bit and decouple from the volatility of equities markets, which are much more responsive to what's happening in the world during a bear market. So I think that has a lot to do with the reason that they're decoupling right now.
That's actually really interesting. It's not the answer I was expecting, because I talk to people all day long about this, and a lot of what people talk about is all of this institutional activity that came in at the start of last year, and there's been this big sell-off, and we're just in this Federal Reserve holding pattern right now. How are you seeing institutional appetite or exposure or involvement in the crypto market right now?
Yeah, it's not to say that there's no institutional participation. There obviously is. It's just kind of less as a percentage of market share than it is in the equities markets. I also think when people talk about the institutional participation that happened over the last year or two, a lot of that was institutions, traditional companies just buying tokens, buying Bitcoin, buying Ethereum, taking a position in those, rather than participating as a super active market participant, buying and selling, being responsive to the news. And so I think when people talk about the institutions coming, they're talking about the institutions allocating part of their balance sheet to this asset class. They're not talking quite as much about kind of trading firms getting really active in the space and starting to participate more and more. That, of course, is happening as well, but I still think it pales in comparison to the retail activity that tends to drive the market.
All right, so what is bubbling beneath the surface on the retail side? We know that bear markets are the time that the crypto industry likes to kind of put their heads down and build. So what should we be following or watching, to see kind of emerge at the next bull run in terms of retail trends?
Yeah, like you said, I think it's very natural what's happening right now. I've been in crypto for about 10 years now, and I've seen this happen over and over again where, the market goes down, a lot of people leave the space and just say, I'm not going to participate for now. They step out, and then eventually they step back in and the next cycle begins. And I think that's a very typical pattern for these markets to follow. I do think the biggest driver and something that we can't kind of leave alone in this discussion is inflation and the impact on the dollar and other currencies right now that's happening in the world. The last time we saw what we're seeing today, which is inflation outpacing savings rates in bank accounts, it was actually in the 1970s, in the US at least, about 50 years ago. And what we saw then was this explosion of financial curiosity and financial innovation. We got all of these products in the 1970s that just hadn't existed before: money market funds, cash management accounts, the credit card boom. All of those things happened. And I think that is the catalyst for crypto right now in the 2020s, where we're seeing that same dynamic. People are starting to get antsy about their money. They're looking for better solutions. Things like eco.com, my company, many others in the space, crypto in general. There's a lot of attention being paid to potential solutions to alleviate the pain that people are feeling from inflation outpacing savings rates. And I think that, for me, is the big catalyst for the next wave. What projects in particular, what parts of the space are going to win in the next cycle? I've been through enough cycles now to say I have no idea what that'll be. It's very hard to tell. And it really depends on exactly when it happens and kind of what catalysts kick it up. We can make some guesses, but it's impossible to know at this point what the next bull cycle will be driven by.
Going back to inflation, what are some of those potential solutions, at least in the crypto market? The idea that Bitcoin has failed as an inflation hedge, is that an attitude that you share with so many out there?
I think that in some sense, yes, and in some sense, no, because I don't think Bitcoin has been an inflation hedge yet. I do think that Bitcoin's greatest promise in the future is its potential of becoming an inflation hedge, becoming a uncorrelated sort of digital gold, which I'm sure you've heard from many people. But I don't think that's happened yet. And I don't think there's any evidence that it really has succeeded at doing that. It's behaved much more like a risk-on technology stock or something like that over the 10 or 12 years where it's existed. And I think that over time, it will evolve into becoming an inflation hedge and more of a definite store of value. But I just think it hasn't done that yet. So, when people ask, hey, has Bitcoin failed as an inflation hedge? I would say, yeah, it's currently failing at being an inflation hedge. I think we're seeing that right now. It's hard to deny that. But I don't think that's an indictment of it becoming one. I think that just means that it hasn't yet evolved to the point. The market hasn't matured to that point quite yet. And I think in the interim, to address inflation and the pain that people are feeling with their money, there's a bunch of things happening. One of which was, I think over the last year, a lot of people speculating, right? We saw meme stocks outside of crypto. We saw, the crypto asset rally and boom. And that was one thing that people were doing to try to solve the pain they were feeling with their money. Whether or not that was a productive use of capital and time is up for debate, but it was something people were doing. And then you've also seen, again, with Eco and others, this explosion of products that offer people better APY rewards, better rates on their money, better rewards, a lot of that powered by crypto on the back end. And I think that that's another big trend to be looking for is products, this is happening a lot now, that use crypto to deliver benefits to end users. But the point of the product is not crypto. The point of the product isn't, hey, this is a token and you're going to use it and you can buy it and you can speculate on it. No, the point of the product is provide some very tangible benefit to actual consumers that need it. And it happens to be powered by this technology on the back end. And I think that's a natural next step for the space to take after the past decade or so of developing that technology in the first place.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.